sharply. This might surprise to a couple of you, but the stock is Edwards Lifesciences, EW. Remember that one? Those of you that were with me last year throughout during this time from here to here, we were consistently bullish on this, made a play on this, made a huge money here, this big gap higher. This goes way back in July and then more here. Played this multiple times. And then what happened over here back in October of last year, the stock crashed big time. Edwards Lifesciences, by the way, symbol is EW. If you cannot see on the screen, so for some of you, it might be difficult to see. But anyways, in October, the stock crashed big time right here. Why? Because the TAVR growth rate, which the street was expecting to sustain above 25% year over year, it decelerated to 18% year over year. So the growth rate decelerated. Still very healthy. You can't argue with an 18% growth year over year. But it decelerated from 25% down to 18%. And the stock used that as a reason, a market used it as a reason to just crush the stock on expectation that it's over for the company, and so on and so on. And that's what happened. Later on, there was another trouble that the company ran into. So it was not just basically the growth rate decelerated, but there was more trouble after that in the weeks following, which had to do with Boston Scientific, BSX, which is a big competitor of EW, reported very strong data. You can see right here, big catalyst, big run up right here in January, and big run up right here. What happened was that Boston Scientific posted very strong data of its TAVR product called, what is it called? It's called the Lotus, Lotus. And basically that gave Boston Scientific a big leg higher in the stock. And so basically a lot of new competitive pressures started, and that basically turned the street away on Edwards Lifesciences. But now I think the picture is changing. I think that Edwards Lifesciences, after basically being a dead stock for now good 7 months or 8 months, is going to make a comeback. Now, from a technical standpoint, this is a massive volume of price resistance right here, this $100 level. Okay, so let's just draw a line here. This is your price level. And let's see. Here's a price level. So basically we fell apart from here. We tried here, didn't break out. We tried again, and now it's making another comeback. All right. So if it breaks out over here, you're going to see some minor resistance come into play around 105.70, which is right here. That's your first target. All right. So 105.70. And if it takes out, this is minor resistance, if it takes that out, you're going to have potential gap fill coming all the way up to here. And that's way up there. That's $113 a level, $113.20 to be more precise. So there's a lot of room to cover from here to here. All right. So if it breaks out and makes an entry into this gap, so this $100 even is a pretty important number. Now the question becomes, what is it going to get there? Why is it going to happen? What's going to happen? What's going to push the stock gets there? Now, by the way, Edwards Lifesciences is actually reporting earnings today after market close. That's why I wanted to bring this in. So if you're going to trade this, use lunch money, please. Okay, the earnings are today after market close, and I'm going to show you what to play it in just a moment. All right. So it's going to report earnings today. Now, here's something interesting that I discovered in the recent research. First of all, here is a file from Bank of America that came from March 23rd. Okay, and this was the Bank of America basically met with the management on March 23rd, and these are their takeaways from that. So let me close this out, and this is the most important point. Two pictures over here I'm going to show you, and basically they tell you a story that is worth remembering. The first one is that this weekend we attended the American, there were two meetings that took place, one on March 20th and one on March 23rd. This picture is from March 20th. This weekend we attended the American College of Cardiology ACC conference in Washington, D.C., and it says, We are confident in Edward Lifesciences Q1 guidance range given the BSX Lotus recall and the closing of direct flow. But EW's US TAVR growth will be the key number to focus in the report. And then it goes on to say the data at the ACC conference clearly positive for the TAVR market. The key here is the Boston Scientific Lotus recall. Why did I highlight this? This is why I highlighted this. This crash that happened right here and then further moved down was a function of Edward Lifesciences growth rate slowing from 25% to mid-teens percentage on the very basis that Boston Scientific had launched simultaneously its key TAVR product called Lotus. And guess what? Subsequently, Lotus had a huge recall. So logically, some of that lost market share or some of that lost growth rate should come back to Edward Lifesciences while this recall is taking place at the Boston Scientific. 3 days later, after attending that conference, Bank of America met with the management and came back with a second note talking about exactly the same thing. We think Edward Lifesciences is likely to deliver above consensus results in Q1 given the Boston Scientific recall and closing of the competitor direct flow, the return of revenue in France, and the pre-litigation channel push EW has talked about. All those things. By the way, in the same exact note, this is just the earnings view right here. But in the same note, this is from March 23rd. They also go on to paint a pretty bullish picture about the pipeline surprises. They see that the market is disconnected from some of the pipelines, pipeline catalysts that are in play in coming months. So basically, in this one, they talk about that the Ultra TAVR delivery system outside the United States, which will be launched later this year. So EW should launch its Ultra new TAVR delivery system outside here later this year, and we see data from EW's new self-expanding valve center in May, with an expected launch outside the United States in the second half of 2017. So there's two very important catalysts over here. When I compared these notes to at least 3 other analysts last night, I realized that nobody is building anything upside, any positive surprises related to these 2 launches that could come. One is expected in May, by the way, so this is next month. This is the self-expanding valve centra, and one is going to be the delivery system that's not going to happen until the second half of 2017. So these are pipeline surprises that could also shoot the stock higher, but from an earnings standpoint, the recall from Boston Scientific is technically positive for Edward Lifesciences. So we got basically a disconnect in the story because the comments are coming out pretty strong after meeting with management, but the consensus has not moved estimates higher, and the chart is setting up for a breakout. Now on the option side, and this thing is interesting, because I've been watching this since I came back from the water park last week. All right, see this open interest? This 2,840 open interest in May, 100 calls. The stock is at 98.46 right now, so it's just slightly out of money. May 100 calls with 2,840 open interest. 380 of those were bought today. But let's zoom into this, and you're going to see that they're buying these every single day for the last 4 days. 4 or 5 days. They're gradually accumulating this. So let me get rid of some of these gibberish charts that we don't need to see. So, all right. So here is this blue line is the open interest. So this right here was on Thursday last week. This was on April 20th. They bought a little bit of these. Then they came back on Friday, and they bought 1,500 of these on Friday. Then they came back on Monday. They bought another 800 of these on Monday. And today they're back, and they bought another 300 of these today. So 4 days straight, they have been buying these calls at May 100 strike call. This is the open interest rising sharply during this time. And now the open interest has swelled to 2,840 contracts. And today they came and bought another 390 of these. I can tell you that they paid $2.65 for these when the bid and ask was $2.45 to $2.65. So my math shows that over 3,000 contracts have been bought for an average price of, let's say, about $2.50 conservatively. About $750,000 worth of call premium has been accumulated right here in May 100 calls, all in last 4 days of accumulation, nonstop. Somebody is betting on a breakout. Interestingly, this is happening 2 weeks or 3 weeks after Bank of America met with management and came back with a very positive outlook. And also Bank of America attended the ACC conference and came back with a very positive outlook on TAVR industry from from late March. So chart is setting up for a breakout. We got bullish fundamental side. We got option activity taking place. So what's the play over here? Don't try to overthink it. Use lunch money and buy straight May 100 calls for $3 or less. Buy straight May 100 calls right where they're buying, okay, for $3 or less. All right, already $228 bought. Just go and buy a few contracts or a couple dozen contracts, depending on your portfolio size and everything, and then just hold on to it into earnings and see what happens. If these earnings came out, they beat on the upside, we could see some massive gap higher and a run. So it would be quite interesting. There's a lot of air pocket here all the way up to 113. All right, so that was the second play. Third play, this is a bearish